Okay, good morning and welcome to the early bird. And here we're looking at the Dow Jones on a 30-minute chart. It's a CFD contract, trading quite close to the actual index itself. Now, I just want to sort of recap of what's sort of been happening to start with, since it's the end of the trading week. And we'd been watching the wave count move up through here and obviously further down as well, and we sort of tracking it and working it all out and so forth. And we were coming into what we figured was a top here. I remember this was the full moon coming into this top here as well, so it just kind of adds to it. I know it's a bit spooky, but the financial system is based off the moon cycle, and quite regularly we see turning points at new moons and full moons there. So it's just sort of some psychological thing to sort of look at. But point being is that we're looking at a top here somewhere, and then this move came in here, confirming that our wave count up to this point was correct. And this structure that came to the downside here was an impulse structure. So in Elliott terms, it's a 5-wave structure, and there's no overlapping waves in that. Each move down was fine, not overlapping on the retest. So normally when you get always, if you get 5 waves in a different direction here, that means we'll get another 5 waves after a rally. So we had this rally here, and then looking at this structure here, was a bit sort of thin to work out a bit, but we thought, well, that may have been the 5 waves, but we should have expected this to take out the low here. So we're in a bit of a dilemma, because at this point here, when this bounce come off here, we basically had 3 waves. We had an A and a B and a C. Now, that's a corrective bullish pattern, and we can be moving up from there. So all of this activity that's been occurring in here has left us in a situation where this whole correction could be a bullish correction. So the market's moving up through here, and we get this A, B, C here as a corrective pattern in a bull market, and then we make new highs coming up here. So we had to include that possibility in this scenario. And because this has been a bit range bound here, it's basically created 3 wave counts just to make it more difficult. And so then, as I mentioned on the Thursday, well, we need to allow these 3 wave counts to play out until there's only 1 left, and then we'll go in that direction. So on Friday night, can't see it here very well, but we made a new high here. So that was one of the wave counts eliminated. So now we're left with 2 wave counts. Doesn't help us that much, because the 2 wave counts that are left, one is bullish and one is bearish. So yes, so that's still a bit of a dilemma. But what we're kind of thinking now, because sure, the 12,000 is support here, yeah, and a breaking of that obviously we'll be looking to the downside. The 12,200 here, where it's sort of playing out from, trying to gain support up there, but not being able to do it because of the supply and resistance over here. So this is a bit of a center point here, this 12,200, not being able to find support, but the support is resistance rather, but the support is coming in at the 12,100. I mean, the Dow Jones works with every 100 points quite well, and that's, if you're trading intraday, that's how you do it. But we're just using this for the time being of trying to work out which way this market's going to go, because if we're trading local stocks, be it shares or CFDs and so forth, we need to take one of the leads from here. We also need to look at all the drivers, global drivers and sectors and so forth as well, to find out what's what. They will play a subtle part. So what we're actually seeing here is that we're seeing the 12,100 and the 12,200 becoming quite sort of dominant in this. So if either of these became support or resistance, then we can start to sort of lean that particular way. At this stage, we're leaning to the downside, and we're looking at this particular market in and the other indices as well, in terms of down for wave 1, yeah, and then an A and a B and a C wave for wave 2, because it made that new high here. Okay, so we've got wave 2 here. So we're looking for wave 3 to come down through here. So in this movement coming down from wave 2 down to wave 3 here, which will be off the page here, then we'll be looking for a smaller subset of 5 waves in that. So we're likely to see, I might just put this on this is a 30-minute, I'll put it on the 2-minute chart just to sort of zoom into this sort of leg here and see sort of what we've got here. This is kind of what we need to do. So this is the 2-minute chart here. So what I was doing is just basically having, excuse me here, just looking at that move that came down from last night here, just squashing that up in there a little bit. Okay, just bear with me a little bit. So basically we're looking for 5 waves down. So we're looking down for wave 1, little A, B, C for 2, down for wave 3, A, B, and C for the wave 4, and then down for the wave 5. So there's an extension in the 5th wave here. But we are seeing, what we're actually seeing here is we're seeing this impulse wave down here, this impulse wave here, and this impulse wave here. So we're seeing the market moving down, but we're also seeing it expanding down as well, because that move there, then this one's larger, and then this one here. So we've got that impulsing plus expanding to the downside. So because we've got 5 waves down through here, then we can expect a counter trend back up 61.8%. In this case 1.1%, basically to keep it simple, sorry, 12,200 here. And this would also be a good resistance level too, because this is the supply level here. This is where the most volume was turned over. So people that bought here been carrying that loss. So when that comes back up there, they'll be the first to sell that. So that's what we're looking at now. We're looking at a move back up, and we're looking at this being the little A wave to here, little B wave, little A, B, and C for the B wave. B wave's always in 3 waves. And then we're looking for a C wave to move up. So we know that we're looking in a C wave is always 5 waves. So we're looking for this to pull back up to the 61.8 retracement level, the 12,200 or 210 in there, certainly within subgroup 1 here anyway. And yeah, so hit to find this wave 2 here, either here or somewhere up here, more likely sort of here or here, even more so into sort of here, and then start rolling over to the downside in 5 waves again, like down for 1, back for 2, down for 3, 4, and 5, moving to the downside here. The number 72 here is really quite important here, because as you see, it's 72 here, 72 up here, and we'll see 72 further up here as well. So we'll see the 72 there. So anyway, just won't complicate it, but yeah, 5 waves down, an A and a B and a C wave back up to supply level here, 12.2, and then we'll see it roll over from that point there. That's what we're thinking. That's what we'll look for. But coming back to the 30-minute chart here, as you can see here, this market is a bit range bound at the moment. We've got resistance, support, resistance, support here. So basically from this outside, from the 12,000 to the 12.4 here, then we're narrowing it down to the 12.3 as resistance, 12.1 as support here, and leaving at the 12.2 here as being the sort of balance point in here. So we don't need to be Einstein, we just need to be a little bit patient and allow this to play out here. So I was kind of thinking, well, look, if something happens on Monday and really bursts through here or bursts up there, then so be it, you know. But otherwise, what we could expect with the supply levels and the demand levels here is for this to play out in here. So I was kind of thinking, all things being equal and nothing comes out of left or right field, then we'll be in this space here until say Tuesday or perhaps even Wednesday, I don't know, somewhere, say Tuesday anyway. But to be a little bit patient, and this is what we'll be focusing on next week, is what occurs in here, and whatever occurs in here, we should be able to pick up the actual internal wave structure to actually preempt a move up or a move down from that point. Otherwise, it will come in terms of price, down this way or up that way, and we'll move with that either way as well. Now, the reason that I'm harping on about this a lot is because this move down here as wave 1 here, if we are correct, then this wave 1 will come down to here, would be the first of 5 waves to the downside. So it would be down for 1, A, B, C for 2, and wave 3 will be longer than this one here. So wave 3 would bring us down through the 11.8 here, which is going to be open up a bigger bearish picture. So we would have down for 1, A, B, C for 2, and then down for 3. Right, we've still got wave 4 and wave 5 to come down after that. So it is quite a, it will be quite a, a predominant move to the downside, and we really need to be on that. We need to be shorting that. So you can see the importance of actually working out whatever happens in here, this will dictate the next move there, and the bias is leaning to the downside. And if that's correct, then we need to be on that before it really starts to move off. Okay, it's a bit too late to chase a third wave down. A third wave is the fastest wave down, so it will move. It will, after this would be something like down for wave 1 to here, back to wave 2 to here, then down for 1, back for 2, and it will come down through here pretty quick. That would be the aim of it. So really, we need to be organized in this little area here. If we're going to trade this market here, it doesn't matter if we don't trade this market or you don't trade this market here, then, but we, this is going to obviously, run through to our market as well. So when we're looking at our market, looking at the futures first, so we can see that same sort of pattern here. So we've got that move down for wave 1, the A, the B, and the C wave for wave 2, and now we're moving down through here. Okay, so yeah, same deal, and the 4,800 would be the thing there. Now I do need to say, just to sort of refine things a little bit here, is that we're looking for 5 waves to the upside here for wave C, because wave C always has 5 waves in it, and it's just a little bit unclear about the 5 waves. I can see part of it clearly. I can see from this point here that we've got wave 1, wave 2, wave 3, wave 4, and wave 5 to there, and that's fine. But there should have been a larger 5. There should have been up for 1, back for 2, up for 3, back for 4, and then up for 5, and then roll over from there. So I'm a bit dubious about this particular structure in here. So it's a bit tricky to say to sort of really pin that down. But anyway, that will become clear. It's just a little side point there. And for our actual index as well, we've been looking at this 5 waves coming down. We'll look at this as the A wave. Okay, A wave to there, the A, B, and C to there, or it doesn't really matter. That can go to there. It doesn't really matter in this particular case, but we're looking for 5 waves down, an A and a B and a C wave, back into this area here. And once again, also looking for that 5 waves in the C wave here. And I can see most of it in here. See that strong third wave there? That's wave 3. So wave 3 there. So you get that strong move in there. So, but there's just this. I find this a little bit sort of confusing just in here, because there should be a 4th here and a 5th up to here. Anyway, just pointing that sort of dilemma out. But that's what we're kind of seeing across the board there, and it's the same with the S&P 500 as well. We've got the down for 1. We've got the A, B, and C here now for the wave 2 here. So we'll see this come down for 1, back for 2. So on the third, it's between the 1300 here and the 1340. So we can see the 1310 here becoming support. We've got the 1320 there. So this will be the same. We need to see this play out across here. So this is a bit of an easier market to trade in terms financially, in terms of rather than the Dow Jones, especially if you've got mini contracts here. So we're basically looking for 5 waves down, a retest back up here. So if it locks itself under this particular 1320 there, then you can look to short that and add under here, expect to bounce off here, back up to here, and then down again through to that point there. So that's the indices, and that's what's occurring there, all important. And the futures market, we're seeing, just while we're here, we're seeing the US dollar index continue to move down through here, coming on to the futures market in terms of copper. First of all, we know that the 450 here that we've been talking about a fair bit, we could see we're looking for a move up to the 54.56 here, this sort of area here. That seems to be, I thought it might have been complete here, but it's obviously sort of a bit more complete there. We've got that sort of strong move down through here, but the market still hasn't let go of that 450 there. This is the little retracement levels from this move up from here. So this 5 wave structure up to here. So we could see this pull back really to 61.8% over to here. But there is strong support going back up further up here. So we just need to allow that to play out there for the short term here. So let's just observe this and to see how this settles into here as support or resistance at the 450 there. So this will keep the material sector, base metals steady, and this is what we're basically wanted to keep our market steady. It's the same with crude as well. This is oil here, rather, at 100 here. And we're just looking for it to hold on to this particular level here of the 100 here, and that's what it will do. This is a couple of ways to count this, but it doesn't really matter. What normally happens is it'll come up and hit the level, have a reaction to it, and then it'll move up and create the first high above the level. So it'll either fail at 105 here or the 110 here, and then it will come back and have a larger correction across the 100 here. So we can kind of expect, my little pen's not working. We can kind of expect something like this anyway, across here. Bit annoying, this Mr. Squiggle pen there. Anyway, it's still, even once this, it doesn't really matter that much. This is going to be sticking to the 100 here. We'll be looking for the first high above the level. We'll be looking for correction back across it and back across again and across again. There's going to be much more to this here just yet. So yeah, now if it does push up as well, if something happens in the Middle East, well, then we'll look at 110 here and fail from that point there. But any strong move up here, of course, will put pressure on the local stock market and the Dow Jones, and obviously push that down as well. And that's part of what's occurring here as well. The gold market is here, and while the US dollar index is pushing down in its primary trend, then gold will be pushing up in its primary trend to the upside. They'll be doing the inverse to each other on a that's on the main trend. On a daily situation, as the Dow Jones is pushing down, then this will push up here as well. So if the Dow does push down further and the US dollar continues down, even though it's searching for new lows there and will bounce around a little bit, this will eventually push higher. I thought it would have come down to this level here, and it certainly may as well. This certainly can be a little finishing off here somewhere and coming back through here as, look, essentially an A and a B and a C wave coming back to here. Probably not as high as that now, but that's the case. All this will just continue to push up and build a pattern from that point there as well. but we are, as I mentioned before, we are looking for this medium level up here of 1500 up here as things eventuate. So that's just our next target level there. Alrighty, I've kept it all sort of short, but I've sort of harped on about the US indices because I feel that that's the most critical point for us at the moment, and that's going to affect everything else there. So the S&P 500 is what we'll be looking at, and also the Dow Jones here working into its level between this 200 and this 100 here. So we're looking for the breakout of those two there, and we will be looking Monday and Tuesday, looking at the internal structure of what happens between the 100 and the 200, and we'll be looking to gear ourselves up and set ourselves up for this market, the S&P, the SPY, and also stocks in our local market. And if you're new to shorting, then I suggest that you look a bit closer at the weekly robo method and the monthly robo method as well. The CFDs are designed to give the trader the edge to go short rather than long. Use shares to go long if you're holding more than 6 to 10 weeks. Use shares, and because of the overnight financing cost, the overnight financing cost is very expensive because it gets calculated every day and at every new price as well. So if you're holding long in a market and the market's actually going up, then it'll be calculated at that new price every day, and it's a compounding interest, so it builds very quickly. But holding on the short side, even though they don't sort of basically throw us a bit of a bone, but at least we're getting away from that leveraging cost. So CFDs to the downside is our edge against these casinos, and we need to take advantage of that. So, but new to shorting, use the weekly robo and the monthly robo. They'll work quite nicely if we're going to get this break from here to the downside. Because we'll be looking at a longer term, we're looking at the beginning of a longer term trend to the downside if it pans out that way. And it's okay for me to be wrong about all of this, by the way, as well. It's just that if it does occur, then we will be prepared for it. We'll be in at the right place, and we'll be able to do all the right things. But if we don't prepare, we don't talk about it, we don't get organised, and then the market pushes off, then we end up chasing the market, and that's not such a good thing. So it's better to be prepared and wrong and take a small controlled loss than not being prepared and and so forth. So it's not about being wrong or right in the situation. It's about being prepared for certain things at certain times, and that's what we try and do. Alrighty, cheers.